Well, we are back. I think CTO says that a lot. We are back. Hello, Marty. Hello, CTO. Hello, Tom. Joining us again, second week in a row, filling in for Mando on the road,
What's
in
up,
the
Tom?
air. Yeah.
Hey, Marty. Hey,
Well,
CTO.
it is hard. It is hard to believe that 24 hours ago we were literally at $109,200, and Bitcoin's gone up $4,800 in 24 hours. Pinch me, CTO. What's going on here before I get into my view of what's going on?
I'm actually very happy to see this pump yesterday and today because it looked shaky last week, guys. It really did. I did not expect this retracement, and it did damage, like a bearish engulfing candle. It broke this inverse head and shoulder. It broke key support, 112,000, and it looked scary. And seeing what we see now, this pumping back like this, it was probably the intention. It smells like a fake right now, and it was a good one because it kind of really did damage to the chart, and I felt rattled. I'm sure a lot of people were liquidated and felt rattled, but now it looks like we're pumping back, and it's very nice to see. So I'm very happy to see the DCA pump today.
Yep, it's definitely good. So we just had to get that out there as a massive move, unexpected. We know we do get the Monday pump. Sunday night, Monday is normally pretty good, and then kind of choppy, sells off during the week, gravitates towards some kind of market maker levels, and then normally runs into the end of the week. Tom, how are you this morning? What do you make of this crazy volatility? And by the way, we have just gone through the quietest stretch of volatility for Bitcoin ever over the last 3 months. And now we're whipping back.
Which we've seen impact MicroStrategy. Well, I had to wear my green shirt today to counteract CTO's red shirt from last week. So hopefully that's helping the price action. But I mean, we're just about to, where are we? 114? Yeah, we passed that last pivot swing high. Things are looking good for Bitcoin in the near term. I think I mentioned the weekly chart last week. We had those 3 down weeks from the top, which 87% of the time lead to one more sweep of the lows. But it looks like we might not get that. I mean, depending on what happens this week with government shutdown, maybe we see a blip on the radar, but right now things are looking positive.
Yeah, we'll talk about that government shutdown too. Marty, what are you seeing in your world?
What's up, guys? All going to schedule following global liquidity. We've finally retraced that little turn back we had from Japan. They've turned up again. But there was so much leverage in the system. I mean, I was reporting on it last week. There was around 18 to 20 billion in longs down to 108, and they nearly got there. I mean, they left a little stack there. There's still 7 billion down to 107,900, but they took care of everything from 108, which was needed. And now I believe they're going to go up and try and attack the 120, where there's about 10 billion in shorts. So 120,000. So everything going perfectly to schedule. Gold always leads with gold. Gold just broke another all-time high, 38.27. So it usually goes gold and then the SPY and then Bitcoin. So it's our turn. Everything's looking good. Nice to see you guys again.
Yes, nice to see you too. So let's get into what's going on. Don't forget, everybody, on my channel, you can see the links to all these legends below, and you can watch them wherever you want. It's all about getting the message out. This is called a point of no return, and it's a very interesting name because there's a couple of things happening. One, everybody that looks at seasonality knows October is called Uptober. Okay, we did not get our crash in September. In fact, September's not even over yet. September has been very positive, which is very unusual. September is called Rectember. Is the action we are seeing now people front running the October pump? Tom, is that possible?
I think it could be. I mean, people act a lot on seasonality. The stat that I mentioned last week about, years like this having a blip on the radar in October, I still, with the timing thing we talked about the second, I just have my spidey senses up about, could we see one more little dip? But generally, I'm positive, and my mindset is that any dips from here on out are for buying.
Yeah, CTO, you've been watching the Bitcoin chart since at least 2017 or before, and October is good. People have been front running all the Bitcoin action since before the halving, since before the ETFs. So people are getting
Yeah.
more clued into the action. What do you think?
I do think there is a seasonality. First, I thought it was like some magic. Then someone explained it to me in a way that I found very useful. Like if you're working in a corporate, you have worked very hard the whole year. Then you want to take vacation in the summer. For most companies, like in August, you're going to go with your family on the boat and on the beach or whatever. And the last thing you want is to sit on some conference call. So what you do is that you don't really announce the huge issues in August. You think, I'll deal with it when I come back. So a lot of the equities, it kind of looks nice in the summer. So for a long time, it made sense to kind of buy in June and then sell after August, because when those guys come back, all those issues are on the table, the stocks dump, and that kind of happens then in September. And then when that is over, there's action plans and things start looking a little brighter again, and that's towards October. So this has kind of explained some of the seasonality we've seen in a lot of assets in a way that at least I could understand what was going on. And I do think we have a bit of that. If we're looking at this year specifically, one thing that stands out is gold, which is running like there is no tomorrow. If I can show the chart. So here is gold. And this has been running up in September as well. And stocks too. Like here is stocks is just up all the time. So here's stocks, here is gold. Looks amazing, right? And then Bitcoin has lagged. That is the little bit weird that stands out to me more than anything this year. And we should have the effect of the seasonality, we should have the effect of gold, we should have the effect of stocks. And why haven't we gotten that? One answer can be that it's like manipulation. It looks so good, so a lot of people should open longs, then you push it down instead and liquidate them. But then it could pop up very fast after that. So I think that's what I'm looking at more than anything this year, more than the seasonality. And
In fact, if you look at the lagging of not just gold, global M2, Nasdaq, the price should be somewhere between 145K, 152K, and $165,000. Tom, as you know, the M2 stuff, you track that as well, don't you? Global M2, and I know Marty does as well. Mm-hmm. But in fact, it's even higher than 165K now, because global M2 keeps on ripping too, just like gold. Mm-hmm. And by the way, just regarding the gold, the reason it's ripping so much is not because American retail are buying or Europeans are buying gold. It's all China. China are dumping their U.S. treasuries, and they have been something like 80 to 90% of all the gold buying this year has been done by China. So just everybody take everything you see with the gold price with a grain of salt. And China is not the type of market that will ever dump gold. But that's a bit of the background. In fact, I have a slide on that. Hold on a second. I forgot to share. This is gold is up 45% this year. Bitcoin's only up 17%. That is extremely unusual, unless, of course, it's a bear market. Anybody want to chime in on this gold action?
Gold is. I think there's a monetary shift. We know that there's a monetary policy shift in all sovereigns, moving to hard assets. And I think China has always notoriously been a gold. They were silver. Ironically, they were all in silver. Then the rest of it all went to gold, and they lost a ton of purchasing power. So they're violently trying to catch up. I believe they're trying to accumulate as much gold as they can. And I think Bitcoin and gold, it's a new monetary reserve going forward. Yep. And so this is just that part of their strategy.
And nobody wants treasuries. The treasury auctions are horrible, and soon the U.S. government's going to have to buy its own stuff.
Unless they back by hard assets, that'll be the new bonds, right? Gold back and Bitcoin back bonds.
Yeah, I feel exactly like Martin. This should really help the case of hard assets. Like fiat has been more challenged now. Bonds doesn't seem as secure anymore. Gold is going up like crazy. That should help also digital gold. I feel so.
Yeah. One thing for the audience to think about just with money flows, when we see money flowing into gold and out of equities, that's generally a risk-off environment. But
Yeah.
when you're seeing money flow into gold and into equities, it's that flight to hard assets that Marty was talking about. And I think with the Bitcoin lag, Bitcoin is just newer. I don't have the chart on me here, but on Friday, I posted something on my Patreon about 75% of investors not being exposed to Bitcoin or crypto yet. So I think there's just a lag in adoption. I know, we see it in the mainstream now, and we have so many tailwinds, but we have to realize that a lot of people just aren't in crypto yet. They don't trust Bitcoin in the same way that they do gold. So I think we still have a lot of tailwinds.
Exactly. We'll share one of those in a few minutes too. One other thing that's kind of important. This guy, Samson Mow, he's an OG Bitcoiner. All of a sudden, he's become very vocal. He travels the world, educating nation states on Bitcoin and why they need it, like central banks, etc. He was working very closely with a place like El Salvador. He's working across the Middle East and other Asian countries. And he said Bitcoin adoption among countries is expected to skyrocket. What's important about the timing of this, he expects it to kick off in 2026, okay, which goes to the narrative of a longer cycle, no bear market in 2026. Okay, and he says the suddenly phase is incoming. So when you look at things like OTC desks, you look at the amount that Michael Saylor and the ETFs continue to stack. Does anybody believe in nation state adoption? Is the Bitcoin strategic Bitcoin reserve going to happen from the US? Marty, you're clued into politics.
Yeah, I mean, it starts with small, obscure countries. I mean, we know El Salvador, Bhutan, smaller countries that have greater risk. But I think it's probably happening under the covers. And also remember, anything regulated by the DTCC or the SEC or CFTC in the US, and that's the same for the Japanese jurisdiction, is technically owned by the sovereign. So there's a massive amount of regulatory capture going on, especially things like ETFs. All the Bitcoin in BlackRock's ETF, all the Bitcoin in MicroStrategy, all of that is regulatory captured by the USA. So they don't necessarily have to buy it, but it's budget neutral. This is that budget neutral strategy. They own significant amount of Bitcoin already through their regulatory capture. And I think people need to understand that. They don't necessarily have to buy it and keep it in their own wallets. Everything on the stock market is technically regulated and owned, the same as your house. Your house is just a title document. If you read your title, all it says is the government entitles you to live there. Okay, it's the same thing. So they don't explicitly have to buy Bitcoin themselves and hold it in self-custody. The accumulation of Bitcoin in regulated entities is the US strategy. That's my opinion.
Yeah, good point. Now, there's another interesting thing happening too, because when you look on chain, the buyers are back. We did go through a little bit of, whale dumpage back in August, but now what's super interesting to see is 170,000 Bitcoin left exchanges over the past 30 days. And that's clear buyer dominance. Okay. Somebody is stocking this stuff away on the side, which I think could be, again, either front-running Q4, Uptober, Moonvember, whatever, but this is very good to see after that long-term holder sell-off as well. And Marty?
I mean, something that people also have to understand, they struggle to understand this, and I stress it all the time. There's never been an asset like this. There's never been a globally fungible commodity like this. Gold has one exchange, COMEX, one in each jurisdiction, pretty much, Japan, China, etc. The Shanghai Gold Exchange. Stocks have a few exchanges, CBOE, NASDAQ, and New York Stock Exchange. The rest of the world the same. They're all jurisdictional. Crypto is the first, especially Bitcoin, is the first asset ever to be traded, the same fungible asset globally on 1,600 exchanges. Okay, that's just the spot asset. Now look at this crazy wave of decentralized perps right now. Look at these perp platforms. That introduces now more perpetual futures against the same asset. So understand that the volatility in crypto is because there is so many exchanges, so many perpetual contracts. So, I mean, think about it. If Bitcoin goes to 250,000, all of these perpetual futures platforms, all of these centralized exchanges with longs have to carry those longs. It will bankrupt a lot of exchanges. They have to flush the market. Okay, a lot of people struggle to understand that. They say, why do they do that, Marty? That's why they do that, because they're at risk. Okay, if the price of Bitcoin goes up and all altcoins go up, all those longs that people have down low, they're indebted to pay them forever. Okay, it can literally bankrupt Binance if Bitcoin goes to 250,000 at this point right now, the amount of longs they have. And that's true across all assets in crypto. They all have the same. And that's
Marty,
a very big thing to crypto. Go ahead.
That's a very interesting. I had a question over the weekend regarding perps. And we know perp DEX volume is doubling every year, with 600 billion in 2023, 1.5 trillion in 2024. So far this year, it's 2.6, 2.7 trillion, and the year is not over yet.
Wow.
So people, that's nearly it'll be 3.5 trillion, maybe 4 trillion, depending on how Q4 is. That is a lot of action
crazy,
compared to what Coinbase would do, etc. Now, the question was, does all this perp action, does it reduce volatility in the spot markets, or does it increase volatility? I think it increases volatility because of the market makers. What's your take? A very important question.
Oh, I think it stimulates market maker activity exponentially. As so many new market makers, so many, cross-jurisdictional market making. And of course, we've got this regulatory wave approaching, guys. It's a massive thing. This market structure bill is going to impose regulations across the world. This is going to make market making a regulated activity in crypto for the first time ever in history. The stock market's had regulations since 1934 against wash trading and manipulation. So the effects for these centralized exchanges, or anybody doing illegal, illicit, or immoral market making, trading against customers, flushing their perpetual books, anyone with control over their order book that's doing it with customer funds or doing it with unlicensed, entities, is going to be fined, stopped. So this is like the heyday of illegal crypto market making, in my opinion, and they're going to go mad. And I think this pullback on Bitcoin was very much manipulated.
Yeah,
and,
I believe it had a lid on. Tom, back to perp markets. What would happen in the world? Imagine the world is tokenized. All stocks are tokenized. It's 24/7, and then you can perp on a DEX. Can you imagine the trillions of volume? It'd be like 50 trillion.
I would get less sleep than I do now. But that's going to be, an exciting future in some way. But we'll have to find, just for our own mental health, a way to shut off from time to time. One thing I wanted to mention on that last chart you had of the Bitcoin flows. And we don't have it here, but something really interesting for the audience to pull up is just watching the ETF flows. And they've almost been a perfect inverse signal, where this is showing you, I assume, more of the professional buying. Retail, or the unexperienced players, they are buying at the peaks and they're selling at the lows. And you can just use that as a bit of an indicator. We saw that again last week on the ETFs. But I had one quick question for Marty. If we do see a crazy move on Bitcoin, and the exchanges are exposed and there are a lot of leveraged longs, is that a material risk to some of those players?
Yes, those exchanges and all of that unregulated perps is a huge risk. It's always been the biggest risk to our asset class. It's out of control. It's chaotic, and it creates. Look at Luna. To a lesser extent, the UST debacle was, sort of a irrational, chaotic event, which in crypto led to contagion. So these are the kinds of things that can lead to contagion. That's why Paul Atkins and Caroline Fong, and this meeting they're having today, right now, the CFTC and the SEC are meeting to try and create joint regulation. That is not a coincidence. That is them coming together to try and solve that problem. They've recognized that extreme contagion risk from this just myriad of perpetual futures contract platforms. It's almost chaotic at this point. So yes, we need to get that out of the system. We need to have clear regulation and control in the casinos against crypto, because it affects the whole market.
But isn't the funding rate a control measure as well, to keep a lid on craziness?
One of the levers. They have many levers. Funding rate is one, absolutely. But I think we're going to see major changes, and I can feel it in the charts. I think specifically if you look at Binance's transfers to market makers, it's been very erratic. Circle is very much involved. We've got Fireblocks very involved, Galaxy. There is a lot of action right now because I believe that window is closing. I call it the Overton window, right? The Overton window, market making in crypto was unregulated, unsurveilled. It's now shifting towards more of a stock market type situation where you need to register any market maker. Every transaction needs to be, recorded and surveilled and is available for legally as evidence. And so you can't get away with these things, especially not using customer funds, which is what FTX was pulled down for. So I think we're seeing the Overton window shift, and as such, we should see volatility. But the ultimate end game is a much more, low volatility chart. And that's very interesting because if you ask 5 people, do you want less volatility in crypto or more? The spot holders will say less. They want the chart to look like the SPY or gold, right? Just a nice 45 degrees north with a small pullback every now and again. But traders and people that use leverage and, love the casino, they want volatility. They love it. Even Michael Saylor in his pictures loves volatility, right?
Yeah. He needs option action to drive demand for a stock. Yeah.
So that's the next debate. And that's the next debate. Do we want volatility or not?
So CTO Sorry. I was going to say.
I can show just on the ETF flows and what you just said. I can show a picture here.
Yeah, go ahead.
So here is the red one is outflow, the green one is inflow. So if we take an example here of September, what you can see here is that first half of September, mid-September, there's inflows, green bars here, right? You see the dates to mid-September. Then last week, it's been outflows, red bars here. Then let's switch to the chart. Then you can see here. So first half to mid-September, there were inflows. Price goes up, ETF holders buy. They even bought here right below resistance. And then last week, price goes down, they sell. So all this about advanced institutional investors, I don't see it here in the chart. They seem to be like every other retail guy, price goes up, they buy, and price goes down, they sell. At least that seems to be the behavior. So I think that's a kind of an important conclusion. They're no different, these people. So I think if we actually get to a blow-off top later, we get to a blow-off top and it starts going down, I think that there will be a lot of dumping going on from those ETF holders. So I think that the time of volatility in Bitcoin isn't over yet. I think that we can get these beautiful blow-off tops, a big retracement, new opportunities to get in at lower levels and run it all the way again. Perhaps it will be a little less. Like last time, it was 80% retracement. The times before that was 85%. Perhaps it will be a little less now, maybe 50%, 60%, something like that. But I do think we will have volatility still.
In fact, that's the exact next point, CTO, is the retracement level. Plan B is back. He went sailing for a month, and he shared this chart. And I know people groan here at Plan B, but I like him. And he's been studying Bitcoin for a very, very long time. Now, he thinks, first of all, for this chart, this is a couple of things you can construe from this. One, and these are my interpretation of this chart, not his. But one, this time is different. So we haven't had the volatility we had in the past, the drawdowns, etc. Second, the bull market has not ended and will continue. Third, we have this long, steady upward trend without any mini crashes in between, which is wild. And then he has this thing, it's a new yellow dot called the point of no return. You can basically see it there across a couple of different time frames. We had it in, let me see, Feb 2017, Jan 2013, October 2020, and June 2025. So this point of no return, the way I interpret it, and he's not saying it implicitly, he likes to be a little bit vague, but that means that is the new floor. And that point of no return there, that yellow dot from June is around, I think, 103K. Although we did hit 75, 76K back in April with the tariff tantrums. Do you believe, CTO, because you led into this, that 100K could be the new floor. If we do go to say 200K, which I assign about a 9% chance we get there, that's not getting no way guaranteed. The retracement would be 50%, would take us back to 100K.
So, yeah, I do think, I mean, the point of retracement will, of course, depend on how high we go before we start retracing. That is for sure. And we don't know that yet, right? We don't know how high we will go. I mean, could be the top is already in, though we don't think so. Hopefully it goes much higher in the blow-off top, similar to the other cycles, and then it starts retracing. And then we can all speculate, probably it will retrace a little bit less than the previous cycles. And then we can perhaps have an idea of how far the retracement will go. I think what is interesting here, like if you look at the top to bottom, like red to green in this chart, red to green, red to green, the duration of the pump before the halving has always been the same as the duration of the pump after the halving in all the previous cycles. And it better not be the same this time, because then that's kind of like next week. So we, of course, hope that the cycle is longer this time, not that it's just less on the height, right? Because you can see it here in the picture. If you look from like green to red, and so on, the green to red would be basically to this point. And we hope that it's a longer and slower cycle this time. That's the bet if we're bulls here, that's the bet we're making. And in that case, of course, it could play out the same, that yellow is some sort of midpoint and it continues way longer this time. So let's hope he is right. But I think it's hard to say with certainty, because the cycle is different this time already. We can see that it has not pumped in the same way as it did in the previous cycles, where the pump after the halving was bigger than the pump before the halving, but same length.
And part of what supports this, you talked about ETF flows. This is the ETF flow on the monthly, which takes out all the noise week to week. Because remember, 40%, 50% of the ETF flows are hedge funds that are doing a carry trade. So they're in and out all the time. But the rest is a perpetual bid for Bitcoin. So if you look at this chart, there's only one nasty month, and I think that was Feb 2025, where we went deep, deep red. And part of that was because of the sell-off after the administration, profit-taking, etc., worry about tariffs. But since then, the gains, the flows are like 3 to 6 billion like clockwork every month. And this shows us basically kind of why this thing is gradually ticking up. Not just that, but the treasuries also, and maybe sovereigns as well, because it is a real asset class. Marty, what do you think of the perpetual bid, the narrative of us going into 2026?
I mean, I'm a big believer in the cycle top around Q2 2026. Always have been since January. I think also I'm very much a fan of the fact there's $22 trillion in debt and 21 million Bitcoins, which means a Bitcoin pretty much to the dollar would be $1 million to cover the debt. And if you look at the amount of Bitcoin held by US regulated entities, it's around 20%, including the government around 23%. I think there's a monetary strategy going on. I don't really, if you get stuck in the weeds in the small time frames and in the short term, it's an accumulation strategy. I think that Plan B is nailing it. I think if you look at my chart, 99,800 was the floor, so $200 from where he is. And that's a 50% pullback from the top on the 4 and the 8 hour. It all makes sense to me. I think he's right, and he's never been wrong. And until he's wrong, he's right. That's the way I see it.
Well, he did overestimate the top last bull run, and that caused a lot of consternation in the crypto Twitterverse. In fact, so much so he left Twitter for a little while, I think. But his process is very simple, very methodical. And it works. And sometimes you got to filter out the noise. You got to, if you look at things like the monthly chart, you don't see the noise of tantrums or government shutdowns or interest rate hikes or cuts. And that's the big part of what we're going to get into next. So
yeah, Absolutely. I think government shutdowns plays beautifully into Bitcoin's cards.
Yeah.
So let's go. Let's talk about
So
it.
let's talk about this, and we'll come back to more Bitcoin stuff and markets, because this also impacts alts. So the big question is recession or no recession. If there is no recession, every time we cut rates, markets go up. The question is how much, and how much rate cuts are happening.
Mhm.
We know, like, even the world is crying out for rate cuts. Other nations are cutting rates. The U.S. Fed, Jerome Powell, remains stubborn as usual because he hates the U.S. president. he's not doing, like, he keeps saying the labor market's fine. It's not fine. And markets,
Not
like,
fine.
for businesses to borrow money, for people to buy and sell homes, they can't do that. They're stuck. People can't afford anything. If you're buying in California, it's over $1 million at 7%. Nobody can afford that type of mortgage. Tom, walk us through this chart.
Sure. Yeah. And I think this chart and the idea of the cycle extending in general should be our primary focus and our main job over Q4, because that's really what's going to tell us if this is going to extend and if we need to hedge going into next year, or if any dips are going to continue to be for buying. So the chart here, the orange line shows, well, this is just as an overview, the average post rate cut performance of the S&P 500. So if the economy isn't sliding into a recession, the next 24 months could be really exciting. And that's the dark blue line for the average, or the red line, average if no recession. Now, if there is a recession post 1990, the orange line, that's the scenario we would have to look out for. And in very simple terms, the way I'm thinking about this, if the S&P 500 is on a positive track for the next 24 months, I have a hard time imagining a scenario in which Bitcoin would be selling off during that period. But the inverse is also true. If we follow the recessionary path, that almost aligns perfectly with the traditional 4-year cycle. So we're getting to that inflection point. And if I could pull up the Bitcoin chart, I think there's a very simple thing we can look at on the weekly that I like to view. So we have Bitcoin on the weekly, and let me just turn off volume to clean things up here. And if you look at the weekly chart with the RSI at the bottom, the interesting thing about Bitcoin, anytime we're still in a bull market, we have maintained above this 44 level on the RSI. When we're in a bear market, we're underneath it. So we are still cleanly on top of that. And the other thing I love about the weekly chart, this is the simplest trading tool I use for Bitcoin. Anytime we go into consolidation, here we were between 30K and 25K. As soon as we break this downtrend on the weekly, we go into the next meaningful move. Same thing for this 8-month consolidation here. Didn't nail the yen carry trade low, sure, but it nails your breakout week into the next meaningful move. Same thing here from our December, January highs. Nails exactly that April 7th bottom week into the next move. And now you could say, do we have another little overhead trend line that we're just starting to peek our head above? So watch this on the Bitcoin weekly close this next Sunday.
CTO, what do you think of that weekly? And by the way, I've always
very
loved
interesting.
the 200-week moving average is also historically
yeah.
a very good support level too.
I mean,
Definitely.
guys,
Sorry,
Go ahead.
CTO first.
No, just very interesting. I mean, a trending approach has been very successful with Bitcoin as a whole, and if we can kind of do this kind of optimization, very interesting. I want to study it more.
Good, Marty.
Great job.
yeah, guys, I'm much more of a big picture guy. I think that Bitcoin is the cycle. There's no longer a cycle. I think we're trading up with global money supply. And just look at the SPY. CTO, open up the SPY on a weekly. SPY. That's the US stock market. Go look at it from 1994 till now. That's what Bitcoin's going to do. Stop with all this pullback bear market rubbish. Okay? You need to end with that. That's what I'm telling everyone right now. That's the trap. The trap is that you constantly think there's going to be a bear market. Look at the SPY from 1994. That's what Bitcoin is doing now. Okay?
Yeah.
It's following money supply. That's it.
Well, the
Going
other
out.
thing is, it's always important as well to take the SPY and divide it by M2.
There
And
you
then
go.
you
Look
get
at
the
that.
real truth. Yeah.
Now look at the beginning of the SPY. You see how the SPY it was doing a typical cycle, pulling back quite heavy, bear markets. Those days are over. It's gone. So I think you need to focus on that. I think Bitcoin is maturing into an asset that'll trade more like the SPY or like gold. And the only problem we have is on the short term, we have these manipulating forces because of this just ridiculous, casino amount of casinos worldwide that are grifting crypto pretty much at this point and pulling it back with all the manipulation strategies available to them. There's literally no surveillance. So once that's gone, I think we'll trade like the SPY.
Yeah, but
I don't think
also
you're gonna
bear
see
in
these
mind
bear
as well, the
Right.
the SPY goes up continually because of money printing.
Yep,
Okay,
it's the
so
same.
money, as the M2 rises, it rises the tides and then floats all boats. And I will also maintain that 60% of the S&P 500 are zombie companies. Many of them will not exist in 5 years. They're going to be
Great
completely disrupted. So nobody is ready for what is coming. We're going to see the biggest disruption to ever hit this planet since the asteroid way back when, depending on what you believe. So it's going to be wild out there. But thank you for that. So net to sum up on this, Tom, for the audience here, things will go up. The cycle probably will be extended
Yes.
because between the money printing and the rate cuts, it has to go up.
Yeah. And, James, I know you and I both trust government numbers implicitly, but the GDP, the positive GDP numbers we had last week, that also, puts me on the side of no recession in the near term. Yeah, there are a lot of cracks in the underlying economy with our debt, even in the housing market, but I don't think the music is stopping right now.
Yeah, and by the way, I just want to say with this whole recession, no recession thing is also complete BS, just like the labor data.
I agree with you.
Yes, there is always a recession happening. If you are a manufacturer of anything in the US besides Tesla, you are facing a recession. If you are in commercial real estate, you are in a deep recession. If you are in residential real estate, if you're in the mortgage business, if you're in the banking business, if you're in the retail business, you're all in recessions. Look around your local area. Look at all the bankruptcies and the shutting down of retailers that have been around for decades, maybe 50 years. They're all gone. So it's brutal out there. The problem is the world is being carried by this new revolution, which is AI. And that's why we hammer home every day, you have to have exposure to AI. This S&P 500, all garbage. It's driven by 10 names. The other 490 go nowhere. And that's the other important thing to know. There is some breath. There's more breath than before. But again, the disruption that's coming is going to be wild. And the reason we mentioned this audience as well is this correlation between, especially NASDAQ and Bitcoin. And that's why when Bitcoin catches up to NASDAQ and its valuation right now, it should be priced at $157,000 to $152,000 a Bitcoin. And forget gold. It's lagging gold too. It's lagging global M2. So that's why I remain very bullish. I'm not at all nervous. Even the fact that half of crypto Twitter says the bull market's over. I look at the big picture, like you say, Marty, it's not at all.
Yeah.
So let's go back to some other news that could make us a little bit bullish. Vanguard, they vanguarded their customers from Bitcoin ETFs for the last 20 months because they thought it was too dangerous. They have customers with $10 trillion in assets, and they are about to unleash the Bitcoin ETFs on their customers. And their customers primarily are things like pension funds, 401ks, that type of stuff. How big is this? Anybody want to grab this? If you consider Larry Finkster, he's got like 12 trillion in assets under management. Fidelity about 5 trillion. Schwab 7 trillion. This is a big one. Tom, I see you nodding. You go.
I don't know if I have anything too meaningful to say on this one. It just upsets me when, retail gets the short end of the stick in situations like this, and they are blocked from getting into certain assets early on when it could be the most valuable time to get in.
Exactly.
But this is a huge development.
Yeah. So it's extremely good news. Thoughts, Marty, on this one? Money flow?
I mean, Vanguard, we can't argue. It's a big bastion of TradFi. I think it's just, once again, another domino falling. There's nobody left that really is against trading crypto. It's all now about, okay, they'll allow their customers to trade crypto, but what platform they're going to use. Are they going to build their own chain? It seems like we're in that season now where they've adopted it. They know it's real, all these institutions, but then they want to get their foot in the door and put their thumb in the pie, right? So they want to get a piece of the action. So how are they going to do that? We know BlackRock integrated into Aladdin. They haven't got their own particular blockchain, but we see Circle, Robinhood, Tether, all going, oh, we're going to make our own chain and get a piece of the pie, right? And get some rent seeking. I just want to know, like Vanguard, what's their strategy? We don't know yet. We know that Charles Schwab is launching all their own products, their own chain potentially. So that's the next sort of wave, I think, is institutions accepting crypto, but then how are they going to participate? Do they want their own exchanges? Are they getting their own layer 2s, their own layer 1s? How are they going to, participate? Because in my opinion, they're all redundant. I think crypto, just like, ATM machines made bank tellers redundant with technology and efficiency, crypto makes banks redundant in the same exact metaphor. So I think they're all on the ropes. They have the liquidity. Their customers have the liquidity. That's undeniable, right? There's $7 to $8 trillion in money markets. These guys have all the liquidity. So that's where the money's coming. But how do they participate? We don't know. They're going to have to, and they're going to fight like dogs. So just be ready for that.
Yeah.
But isn't it amazing how far we come? It's some years ago, we had a bank in Sweden that famously banned their employees from buying Bitcoin in their own personal capacity, like not at work, but when they come home, their employer banned them from buying Bitcoin. And then some guys took them to court and said, but you cannot do that. I can buy whatever I want in my personal capacity. No, the court gave them right, like the employer can prohibit you from doing different things in your personal capacity. So the bank banned those people because they said it's too risky and so on and so forth. That one, I can't remember exactly because it went on for some time, but it was below 10K, I think around 4K or something like that. So they protected their employees from the deal of their life.
Yeah,
and
what's going on in
that's just
Sweden?
a few years ago.
Yeah,
Now
CTO,
we have BlackRock.
Yeah, we have Sweden, the IG Metall or whatever it's called, the union in Sweden, trying to block Tesla for the longest time. And just last quarter, Tesla sales are up 300%. Did something change over there in Sweden?
I think the union, I haven't followed it exactly. I think the union lost, actually. They gave in.
They did lose, yeah. And then all of a sudden the sales explode. It's just weird. But unions look out for the unions. They pretend they look out for the employees, but really they just want to manage the pensions for the employees. That's where all the money is made by the unions. At least
where all the money is made, correct.
Going back 100 years, that's how mafia began. Unions.
But it's delightful to see like how much against Bitcoin and crypto the whole TradFi was just a couple of years ago. Now we have the biggest firms in the world, climbing over each other, trying to grab the business for their clients and so on. Wonderful.
Yeah.
Imagine the prices we would have hit last cycle if these news events and catalysts were all coming together. It's really remarkable. But just going back to what we were talking about with the extended cycle, there's this confluence of all these factors and stablecoin adoption and institutions, credit card companies, banks bringing on all these crypto rails, but they're not here yet. I think maybe there's going to be some selling in November by people who are projecting it's the end of the cycle. But I just see all of this coming together, and it's really hard to be bearish for next year when you see all this momentum building.
We got rate cuts. We got new players. We got market makers. We got the ETFs. Talk to us, Marty, about the new ETFs that are coming. There was a flurry of activity late last week.
Yeah, massive news the passing of the generic commodity-based trust rules by the SEC is a groundbreaking day. It goes over people's heads, but what it means is, if you meet certain criteria, which are not that stringent. Basically, if you just have 60 days of trading on a regulated futures exchange, or you have certain ducks in a row, you can automatically get approved as an ETF, as a commodity ETF with staking and in kind. And so you saw today, all the 19 Bs have been asked to get pulled. So the SEC no longer even requires individual case-by-case approval processes. If you pass the generic standards, you're automatically approved. So this opens up the floodgates for, you know, a massive crypto event where we're going to see potentially the top 15 by market cap going ETFs on Wall Street over the next 3 to 6 months. You just can't believe the amount of liquidity coming into crypto just from that rule. And then on Friday,
I'll stop you there for a second, Marty. Is it bad that there'll be too many coming? Can that like dilute the market just like meme coins did, you know, grabbing too much of the oxygen from the room? Is that a downside?
I just think that they're a different kind of holder. I mean, the whole reason we had the 4-year cycle is that people were weak hands, right? They buy in speculation. They don't really believe in crypto. They don't really even understand crypto. And then they're waiting for a top to sell. They were what I call people coming into crypto to make dollars into more dollars. They don't really believe in crypto as a reserve. But I think these institutions have now, I mean, we just see right now, this news just came out that Pakistan's Prime Minister Shehbaz Sharif has expressed that cryptocurrency is, quote, the tool of the future. Okay, this is undeniable. They're starting to understand that this is not just a gimmick. It's not a speculative asset class. This is the rail of the future. So I think everything's changing. I don't think the cycle is the same as it ever was. I think it's now an accumulation strategy. Sovereigns, institutions, etc. So these ETFs will be issuers that buy baskets and intend to hold, not like retail, which just dumps out of fear of any headline-based market, right? We've been living in a headline-based market in crypto for the last 10 years, where any bad news, people dump. They're scared. They think it's going to zero because they don't understand they're being conditioned to believe that. Okay, the trap is the trap. So I think we're going, these ETFs are fantastic for crypto. These treasury companies are great. They have like 20-year mandates to hold the asset. This is not paper hands. These are real people, real companies that are holding for the long term. They see the value. And I think the more ETFs, the better. Obviously, there'll be zombie ETFs. We see them already popping up. But the whole movement is fantastic. It's the US has opened up its institutional rails to crypto, and I think we've only seen 1% of the amount of liquidity coming into crypto. I think it's just about to explode with these generic rules. It's a big event. And we saw on Friday after market close, 61 new updated filings for Solana ETFs. I mean, changing of attorneys, how many shares, custodian updates. It's happening, guys, and it's happening in a big way.
Within a week or two, you reckon?
I think Solana's ETF is going to be very different. It's a true text. It's a tech stock. I think it's definitely going to shake the market. In my opinion, it's going to be one of the biggest crypto events ever. So
James,
I'm very excited for that.
It's terrible, all this clarity and no more regulation by enforcement. I mean, Gary Gensler and Elizabeth Warren, can you imagine the conversations they're having now? They must be really happy.
Yeah, very hated people. Okay, let's get into a couple of, we have the Barron's thing. I don't know if you want to touch on that very briefly, the Barron's roundtable, but
it's not too important. I mean, I think the thing I take away from it is that we as retail can win. We just need to pick the right assets, which you help people do, James. Thank you for that.
Well, I think let's show this actually. This is the Barron's roundtable. Basically, there are 10 expert picks compared to the S&P 500 over, year to date, match the S&P 500. So one thing to stress here is asset picking, stock picking is not easy. But we've also learned as well over the last couple of years, TradFi is slow and always wrong. And their goals are also very different. Their goals are just to beat the S&P 500, and even the experts can't do that. So anything else to add, Tom? I
think if we look at 24, the thing I take away from this, so in 2024, they underperformed the market by 20%. And now they were outperforming by 7%. Now they're even to a little bit under. It's made me laugh. I don't think they got that much better in a year. I think this is just a story of a broadening market rally in the S&P 500 and NASDAQ. Not that they have gotten meaningfully better in terms of their stock picking, but to underperform by 20%, last year where my long-term hold portfolio, if you're in the right assets, you know, I'm not going to say how much it was up, but it was up many, many multiples of that. So as that pertains to crypto, the one thing I take away from this is, even though in markets the rally is broadening, in crypto, I don't see that. And I think we need to be a little bit careful. This isn't the shotgun style approach of 2021 where you could throw the dart at any altcoin. You could buy a monkey JPEG and watch it go up. You need to take more of the sniper's approach. And what I would encourage people to do is, if things really start ramping up, identify the assets you want to be in now, and look for relative strength. So that could be as simple as looking back to the last couple dips we saw. When was it? June 22nd, Israel ran, where we had that dip. Just see what altcoins are performing best in terms of their percentage gains from them, where they are in relation to all-time highs, and be ready to move, as opposed to chasing the pump and get in now.
Exactly. And a lot of concern people have right now, again, goes back to seasonality. We know Q4 is very strong for tech stocks. We also know it's very strong for crypto. So quick round the table, starting with you, Marty. If you had a bag of, say, AI adjacent tech stocks versus a bag of Bitcoin, Sol, ETH, whatever, which you think would be the fastest horse into Q4?
I mean, I'm not really a fastest guy. I'm a hedger, so I have them all. You know, I have a bag of Tesla. I have crypto. I have cash. I have everything. But I think ultimately, Tesla's going to probably 2x, probably by the end of the year. I think Tesla's a highly undervalued stock, been highly politicized. And I think crypto equally will probably 2x by the end of the year. In my opinion, we're going through 4 waves of adoption, and it's pretty clear, right? There was treasury companies, spot ETFs. Then there was this movement of on-chain derivative exchanges, sort of putting the markets on chain. There was AI, started off early. Then there's merchant cross-border stablecoin services, the Genius Act. And finally, it's going to be earned in stablecoin. And ADP is already prototyping that. So you'll get your salary in stablecoin, and that'll kickstart the whole thing. Then once everything is in stablecoin, then AI agents will analyze the blockchains, and that'll be full, new implementation of a monetary and fiscal policy with regulatory capture. I think that's the game plan. It ends in Q2 2026. Trade accordingly. Hold blue chip layer 1 networks that hold stable coins, hold Bitcoin, hold Tesla. It's all pretty clear. Me and James have spelled it out. I mean, this is it. You know what to buy. Don't buy shit. That's the answer.
I like that.
Quality, best of breed products with adoption that fit into that adoption wave, and you will do fine. They will all go up.
Yeah, exactly. Well said, Marty. A very important point there, that you got to be in the top 1% of assets. And I've done the numbers. It doesn't matter what those assets are, but just make sure they are in the top. In fact, if you're in the top 0.3% of assets, you will beyond crush it. You'll make very lifestyle, life-changing money. But just go into the markets thinking, okay, 99% of what's out there is complete trash and it's going to burn and die. Yeah. Don't be in that stuff at all. Yeah, you can maybe trade it for a week and make a quick buck, but it's dangerous. CTO, bring us your wisdom. Q4. How obviously we position ourselves both sides of the fence because we don't know exactly where things are going to go. I do believe the AI narrative is bigger, definitely over the next 2 years, than the crypto narrative. But if SBRs come and if the world gets tokenized, those rules are off. Then everything changes.
Yeah, absolutely. So, I mean, you covered it already. To add on that, maybe the easiest trick maybe is to look on the, say, for example, altcoin versus BTC chart. Then some of that filtering is done for you already, because if Bitcoin goes up, most of the altcoins will go up, even the projects that aren't actually doing so well. You kind of can't really see it because they go up anyway, because Bitcoin goes up. But if you look at the altcoin to BTC chart, you see which ones are going up stronger than Bitcoin. And if they don't, there's no reason to hold them because the risk is always higher than holding Bitcoin. So they better go up more. Otherwise, it's a bad risk reward. So that's one of the easiest things to do. And you can actually do the same for stocks. You can take, for example, take the stock and in TradingView divided by SPX. You just type the stock name divided by SPX, press return in TradingView. You get the chart of the stock versus the index. And same thing there. It better go better than the index. Otherwise, why hold it? So I think that's one way to clearly identify which assets are going better than the index, and only then they're kind of worth looking at. So I think that could be a tip. And then, of course, like you said, it's good to try to figure out which projects have potential ahead of time, and then monitor them, follow them, see if they start running.
Exactly. And Tom, I know you're a perper like me. We perp on the side because it's hard to find things that are going to 3x now over the next 6 months, I believe.
Yeah.
So I'm a little bit more conservative, although I may not appear that way. I like sure things. Tom, how are you playing this game in Q4?
I mean, I say all the time, the only things I hold long-term in my, cold storage wallet, it's Bitcoin and Solana. And then the other coins, you'll date them, but not marry them. I know that's kind of a crude expression, but yeah, but in terms of perping this weekend, you could see the flows actually coming out of Aster and going back into Hype. So, just playing those little moves and rotating as that applies to equities, I'm in Tesla as well. And in terms of my trading bag, I look for momentum. So I just got out of the quantum trade last week. It looks like energy is picking up. There's always a little sector that's moving. But again, that's a smaller portion of my portfolio that I'm playing carefully to add a little bit of spice. And the criteria are different. It's like those assets that you're playing on those swing trades, I might not be as strict in terms of the balance sheet, the fundamentals, but if there's momentum in the chart, I'll go for it. But it's like a couple week, to a couple month swing trade. That's it.
Yeah, there was a lot of questions last week. I have this one from Jimmy the Kid. And Marty, you opened up a big can of worms, hammering Binance and their manipulation. Two questions. And we know that Binance doesn't have their own Solana bag. They use customer funds to drive price down in cahoots with Wintermute. True? Not true. First part.
I think Binance's strategy was to accumulate Solana, obviously use manipulation to accumulate low, and then become the number one validator. And they're the number one validator. So they get all the validator rewards and then use that as their Solana stash to fuel their manipulation. It's an accumulation strategy. I mean, I always ask, I posted it last week, what is Binance's intention with Solana? And, if you you'll get a different answer from anyone. But I don't think it's over. I don't think it's over till they're told they can't do it anymore. But I believe that they're in an accumulation strategy with Solana. They're the number one validator. And Sui. They're the number one validator of Solana and Sui, Binance.
Yeah.
Little known fact. I mean,
so they overtook Helios then.
Yep.
But the other question is, how long can they continue to do this? Now, I don't think Binance has the power anymore to manipulate Bitcoin as much as they did in the past.
Nope, they've lost control of Bitcoin. Yes.
But Solana, yes. Yeah.
Yeah. So once the ETFs go live, there's certain, let's say 2 or 3 months after they go live, I think you'll start to see a change in the way that Solana is traded. In the same way as Bitcoin and Ethereum, just more consistent, balanced, less volatility, and just more aligned with the spot market rather than aligned with the casino.
Yeah.
And volatility will move to other things like Tom just said, emerging narratives like the current DEX per platform tokens, Aster, Quanto. This is like the flavor of the day, and there's a lot of gains to be had. But and that volatility will move there. But I think in the main blue chips, they're going to eliminate as much of the manipulation as possible, and the volatility will probably move. And so all those people that accumulated Solana under 200, for example, will probably do very well. And everyone else, you're not going to get the massive returns as we did because we were early. You'll have to look somewhere else. And that's why we perp trade, James.
Exactly. The importance of being early. A quick question regarding Marathon mining. Marathon have a very big bag of Bitcoin, about 53,000 Bitcoin. They're mining 700 a month. Their NAV premium right now is 1.08. So you can buy all of their Bitcoin at an 8% premium and get all of their energy, all of their facilities, all of their IP, all of their staff, everything else for basically free. It's wild. They were trading actually at their Bitcoin bag value for quite a while this year. And some of the other ones are very underwater. Some of the Sol ones are like Upexi is under their
a little
NAV premium,
breakdown.
which is wild. So yeah, a lot of good stuff. We're getting close to the hour. Yes, Coinbase is centralized. Do you think the Bitcoin HPC miners a valid AI play? I have a very weird theory on this. Let me explain. First of all, if you look at what Elon Musk has done with Colossus 2 and Colossus 1, he has all the compute in the world and he's built the best AI in the world. Everybody else is playing second fiddle and they're not going to catch up. Even ChatGPT, OpenAI, they are licensing GPUs from CoreWeave that cost 60 grand a year per box. Elon does it for 25K. How can ChatGPT, OpenAI ever catch up, ever be profitable competing against Elon? He's already far ahead. He's got the most compute, the best LLMs, and they're doing an awful lot more in the very near future. And then in a couple of years, I believe they'll be able to turn on inference in Tesla vehicles when they're not being driven. The AI5, AI6 processors will be able to do compute for AI. Very weird out there theory, but I've been thinking about this all the time. CTO, would that be wild to think about? And do the Bitcoin miners have a chance up against the big, data centers from Google, Meta, OpenAI, Microsoft, etc.?
I mean, the whole AI and where it will be computed will be wild, absolutely. Like, I have some telecom background, like in 6G, also thinking about how to distribute the AI compute and so on and so forth. So I think that there will be a lot of ideas and solutions that are wild, because of course it would be better to have some of the compute closer to the devices, right? Or the core or wherever it is, rather than only running it in data centers and try to steer things real time and so on. So I think it's anything can happen. I mean, we've all said it. It's brave to bet against Elon Musk, right? After his track record.
Yep.
So it's a fascinating time ahead. The Bitcoin miners, I don't know really. It's been difficult business for many of them. I'm not so sure, but I don't have any Bitcoin miners. I'm not sure how to judge it.
It's real simple. You make money on Bitcoin miners at the bottom of the bear, not at the end of the bull. Another good question. A lot of people are expecting a huge crash. I think that's a thing I call POMO, the pain of missing out. Mm-hmm. People want to somehow will a crash because they're sitting on cash. We have Div Ray here saying, I'm holding 20K of Solana rest in cash for the big crash incoming. But with this here from Corsair, liquidity way up, interest rates coming down, Bitcoin oversold. We know where we're going. So be careful holding too much cash at this stage of the game. Tom, what do you think?
Yeah, I would love to pull up the NASDAQ chart real quick just to talk about potential dips and how we've seen that bought up. But just going back to what you were saying on the miners really quickly, when you mentioned the cost of production, I didn't or not cost of production, but what XAI is paying versus what OpenAI is paying. What popped into my mind, this is the difference between the production cost of Rivian and Tesla. It's like,
exactly.
Yeah.
Not going to make it.
Anyway, so if we just look at the NASDAQ, and this is the same for the S&P 500, but if we do have a garden variety pullback of, that 3 to 5%, I suspect that's all we're going to see right now. And dips have been for buying. So if you look at the pink line here, this is the 20 weekly, and this is generally where the street steps in to buy. If we ever get a pullback to that on the NASDAQ or S&P 500, I would be backing up the truck, as James says. But the 20-day moving average has been a better guide for the rally, and that's generally where retail steps in. And we haven't made on the daily a lower low, in months now. So, could we see a pullback just to shake some folks out before things really run? Sure. But I'm not selling any of my positions, and I see that as a big opportunity to get slightly better prices.
Awesome. I like that take. Very important. Everybody, we are at the hour. I want to just once again, before we go to closing thoughts for the week ahead, thank everybody for being here. Thank you to the moderators in the chat. Don't forget the links below for everybody here as well. Final thoughts for the week ahead. We'll wrap with you, Tom, first. Bullish, bearish, is this just a DCA pump right now, or will it continue into October, which is what, 2 or 3 days away?
Yeah, I mean, generally for October, I am bullish. As we were talking about with just the time cycles for crypto, I'm still eyeing Thursday. Like all the price boxes have been checked. I suppose for Solana, we need to pass that pivot at 115K. Then I'd say we're off to the races from this local bottom. If we reject at 115K, maybe we get a little dip into Thursday, but overall I'm bullish for October. So yeah, some near-term noise, but nothing meaningful on the larger scale.
Okay, Marty, people always hound you about Zeus.
Yeah,
What's going on there on the weekend?
Zeus is huge news, guys. I'm not allowed to say it, but just hold your bag. Don't be stupid. 10 cents was the floor. This week, you got huge things. Obviously, I told you the SEC, CFTC roundtable, this change of 19Bs, this generic listing standards, that's kicking in this week. We've got major things. We've got FTX distributing another 1.6 billion. Their final 1.6 this week. We've got the ADP numbers coming out on Wednesday and the government shutdown. We didn't really talk about the government shutdown and the implications on the markets. I think it's bullish, in my opinion. They're obviously going to print more money. So it opens up the door for a debt ceiling raise, and that's always good for crypto. But then we also got token 2049 going on right now. We didn't speak about that. Tom Lee speaks at 10 o'clock in the morning. Everyone's there. I mean, literally everyone. Anza's there, all the Solana validators, everyone. And that's going on Wednesday and Thursday. Then Friday, we have non-farm payroll. We know that can always cause a dip if it's not what people expect. Then we've got things like the Swift announcement, where they've kind of sidestepped their commitment with XRP. We didn't talk about that either. That's a big blow to XRP right now. Swift is going to make their own blockchain. They're not using Ripple. That was Ripple's. That's the reason Ripple went over $2. Was that Swift announcement. So there's a lot of things going on this week that could cause volatility, like there always is. Yeah. But I believe we're following global liquidity, and I think we're going up, guys. Where to? Probably 140, 150, maybe a pullback to 120 again. But I think our floor was 98,800, just like Plan B agrees. And if you haven't bought Solana under 200, you haven't bought Bitcoin under 100,000, I don't think you're going to get those entries again. And the problem is that when people don't get those entries, they become crypto fudders. And you need to just check yourself in the mirror. Just because you didn't get a good entry and others do out of greed or revenge, don't FUD crypto. It's very immature and ugly, and we don't appreciate it. There's always another trade. Just be patient. Listen to what we teach you here and get your entry. But there you go. Keep some cash. It's always a good idea. Obviously, just like Tom said, there will be pullbacks. There's always another trade in markets. They don't just go up, okay? They don't just go up. You will get your chance. Be patient and watch.
Thank you, Marty. CTO, final thoughts for the week ahead. Is this just the DCA?
Yeah, I'm very happy. I'm very happy today to see this pump above 112,000. I see like the last resistance is really 117K, and that's only 3% from here. So, I mean, we could be off to a very exciting time ahead. I hope so. And I feel optimistic after today's candle if it closes like this.
Yeah.
What percentage are we from all-time high, James? CTO, just check quickly. I think we're 8%, right? From all-time high.
Yes.
Yeah. So from all-time high to current level, it's 8.5%. Yeah.
We're literally one decent 2-day pump from all-time high, guys, and it happens real fast. That's what I predict by next week.
Exactly. Bitcoin went up over $4,800 since Sunday morning. It's wild to even think about. Okay. Although when you talk about that nearly $5,000, it's a lot of money, but not when it's $100,000 asset. It's 5%. But the point is, you compound 5% twice. That's 12% almost. So and it's big. Thank you, my friends, for coming.
On Bitcoin and Solana closed above the 50% on both assets. So that was good too.
But could you repeat that again, Tom?
The weekly candle for Bitcoin and Solana closed above the 50% of the local range. So we're in the stronger half. So there's another bullish sign for you.
I got a good ending thing. Once CZ said live on a space, I heard him say it with my own ears. He said, the way the markets work is you've got to prove that you want it enough. What he's saying is the price will rally, like it rallied over 50,000 or 60,000 and then was consolidated and pulled down and tested. You have to prove you want it above 50. Then it went from 50 to 100, and then they pulled back and tested. We wanted it over 75. Then it went up to 120, and now they are testing to see whether we want it over 100. And as far as I'm concerned, this this higher low we just got was proof that we want it over 100. And CZ controls the market, guys. That's the way it works. That was the test. I don't think we're going on at 100,000 again. If you're not in Bitcoin, you're sitting on the sidelines, please enter something DCA. The name of our damn podcast, DCA. Don't screw this up. Don't fuck this up. That's my final words.
Yeah, there's some people sitting on a lot of cash, again, hoping for that crash. Q4 is the best quarter of the year for both stocks and for crypto. So we'll see. Maybe this time is different, but I say be on the train. Big thank you, Tom, CTO, Marty. Love you guys. Thank you to the mods in the chat. Don't forget links below for these legends.
Just remember, government shutdown is bullish, people. I don't want to hear that. Government shutdown is not a reason to sell.
Yeah,
it's a reason to buy.
It's always a blip on the radar.
Yeah, I actually had a slide on that. We didn't get to it. Yeah, don't worry. It's always a nothing burger. And in fact, a lot of people are threatening to quit the government. And that plays exactly into the hands of the administration. They want them gone because now every government entity has access to Grok. So you can do 3x, 5x the amount of work with a fraction of the people. Thank you all. Take care, my friends.
Bye, everybody.
Good night.